So I'm Edward Hobbs and welcome to our November video. Let's start with clearance rates, just pushing that 80% over the last 4 weeks. We are in the heart of spring, so stock levels have certainly increased. So pushing 80% is a real testament that we are still in a seller's market. Melbourne house prices have risen by over 4% in the last quarter, which is really quick turnaround according to Domain's house price report, and certainly evidence that the downturn is now behind us. Now, ANZ have come out recently with a very bold prediction by saying that house prices in Melbourne expect double-digit growth by the middle of next year. Now, this is off the back of the Reserve Bank talking up the economy turnaround in 2020. These economists certainly believe that the current sentiment, interest rate cuts of course, government tax cuts, will certainly supercharge the Melbourne market to a point that will effectively wipe out any losses seen between 2017 and early this year. Now, across to the First Home Buyers Scheme, which kicks into play on the 1st of January 2020, first home buyers will only need to save a 5% deposit. The government will effectively guarantee the next 15%. Buyers, though, will still need to borrow 95%, but will avoid the costly lender's mortgage insurance. Now, just to touch on the eligibility here, the government will hand out 10,000 loans each financial year. Singles can earn up to $125,000 a year, couples at $200,000 a year, and a Melbourne house price is capped at $600,000. So moving across into interest rates, Westpac have just recently loosened the clamps on interest-only loans for investors. The Westpac is looking to increase the maximum loan-to-value ratio, the LVR, from 80% now to 90% for interest-only loans for investors. But note, owner-occupiers for interest-only loans is still capped at 80%. Now let's look at the Heron Todd White National Property Clock. They are a little bit more conservative in their estimations of where we are sitting in the current market cycle. Now let's look at houses, which has just been pegged at the start of recovery. Interesting enough, we feel it's actually in the rising market segment. And if you look at apartments, certainly they can be split into two segments. Bottom of the market, yes, we agree, for the newer ones, which certainly may have some cladding issues, but the 60s and 70s, or the even 30s and 40s, the Art Decos, they certainly now should be looking into the start of recovery phase. Now moving across into a couple of sales that certainly stood out in the month of October, and what a big month it was for the office. Let's look at 12 Mallison Street, just under 400 square metres, a 2-bedroom house, 1 bathroom, 1 off-street car park as well, sold for $2,335,000. 5 bidders at this auction, which went extremely well. And also 382 Hyatt Street in Richmond, a little single fronter, reserve around that sort of $1,020,000, $1,030,000 mark, sold $1,224,000. We had 7 bidders on that occasion, and the auction went for 45 minutes. And a special shout out as well to Talia and Andrew from the block. Auctions coming up in the next couple of weeks. Just want to say the best of luck to our clients there, Matt and Elise, and also to Russell Cambridge, who is conducting the auction. And a couple of special listings as well to keep an eye out for in the month of November. Let's begin with 154 Brighton Street. This is an iconic house on the corner of Yorkshire Street. You've probably already seen it before. It really stands out. It's 5 to 6 bedrooms, a couple of bathrooms, garaging as well, just off Yorkshire Street. It's a real showpiece. It's going to go particularly well. And also 15 Manton Street in Richmond, close to 550 square metres, no heritage overlay, but the house itself is certainly family orientated, 5 to 6 bedrooms. You've got Type Street behind, direct access, and that's also pegged around the $3 million mark. Well, that's all we've got time for today, viewers. Thanks for watching. Hope you get some value, and we'll see you in December.